RMED currently making potentially actually an accumulation period for a move to the upside. Let's go ahead and verify exactly what I mean by that. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you from my kitchen, actually, not from the studio today. I have my toddler right next to me, so apologies if he makes a couple noises here and there, but yes, we're going to go ahead and move along with the analysis as per usual. So I've actually received a couple, I'm sorry, a few requests actually for this RMED ticker, and I think it is worth a look. And I know somebody on Twitter asked me about a position that he has, and somebody on the Discord as well has mentioned this to me. So let's go ahead and go over the potentials for this. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. But with that said, let's go ahead and dive right into the charts. So we are looking at RMED here on the 4-hour chart, and as you can see, we are potentially at the completion of a broadening descending wedge. So usually this particular pattern, formation or pattern signals a potential reversal of price in trend, just in general. So I usually talk about the golden rule of 3 within this channel very often. So here you can see the test of the resistance number 1. Excuse me, I don't know what's happening with my voice. Test number 2 and test number 3, followed by the capitulation event or accumulation period before a true attempt at test number 4. Now, usually the best way to trade this particular formation, if you're short biased, the short positions usually present a bull trap here for longs, in which you can actually gain entry for a downside move. And actually, let's go ahead and just see how that can happen using a Fibonacci retracement. So, all right, we're going to go ahead and bring it up to right there at the swing low. So, as you can see here, longs would actually get really optimistic in thinking that we're going to break by making a breaking of structure here. So this this high of this candle here, because it looked like it was making a series of higher highs, and then we were accumulating again to make that potential move to the upside and continue. Usually this is the bull trap that gets all the longs trapped. So, and it usually happens at the 4-spot 618. So in this case, you can see that we use the 4-spot 618 as a form of resistance, thus signaling short positions to open for just a long way down of profits. Okay, so in this particular formation, the the short biased positions usually gain the best gains on test number 3, and the long positions usually get the best positions from the potential to test number 4. Very hard to see this when we're just this deep within the formation, but this is usually the strategy that this formation can present for both the bears and the bulls. I can tell you this because I am a short and long biased trader. I can trade both sides. Okay, so the market presents both sides of the trade, so we could actually see that forms of resistances or points of resistances equals short positions, points of support equals long positions, to put it in just a very, very, very simple manner. Of course, it's more complex than that. Okay, so in this particular price action, you can see that, hold on just a sec, you can see that we are we are breaking out prematurely from this ascending triangle. Now, usually ascending triangles like this do present a bearish and a bullish outlook, but in this case I do believe this to be a bullish outlook first, but it looks like we may actually come back down for an accumulation period before a continuation onto the upside based on the candle structure that's happening here. There's really not much bullishness happening within that there. So let's go ahead and open up some SMAs here and see just what we have. Okay, so this is another reason why I believe that we can be looking at a potential downside. So this is the 10-day simple moving average, which is which the price action is just below of, which can be a potential guide for us to find a way down here to test our support line of this triangle, and or the 100-day simple moving average, which could be in confluence with our support zone. So this gap in range here is usually what I think could be the area of loading before a continuation onto the upside. Now, the reason why I have it down to 387 is because of the one spot 618 at $3.87, which is usually where the sentiment likes to take the trade to in general. So the one spot 618 could be that potential bounce zone alongside the top range here, which is 424. The 424 is confluent with our actually not confluent. It's placed because of our support line here. So implying that we could potentially do it in about 8 hours, just to put it into perspective here. This is that support zone that I am currently looking at. The reason why I made this implied path down to this area is because potentially the SMA 100 could serve as that point of support before a continuation up. Okay, so there is still some room for the shorts to gain a little more gain before an upside, but be very, very careful if you are short this stock, as this test number 4 usually is the true breakout attempt, followed by a continuation to test this newly converted resistance into then support before a massive continuation to the upside. The upside would actually, this formation has a price objective. That price objective is usually found at the genesis of the formation itself. So you are looking at a target of $9.58. So if your average is right down here as a short position, you could be massively margin called. Okay, so be very careful. The reason why I'm talking about short position here, you guys, is because it was a particular question for somebody that's short this stock. So I want to just make sure to cover the short bias people as well, since I am both. Okay, so, and this is good for the longs too, so that you can be able to learn the play both from a short bias versus a long bias. Okay, let's move on to the next chart and see what we have. So for you guys, I actually did run a statistical back test in this ticker. So in particular to the 12-hour time frame, I have by hand performed the back test of volatility, which is represented by volatility is this, represented by this indicator BBWP, versus momentum, which is stochastic momentum, in particular to the TradingView software. It is proprietary to TradingView software, and it's free. So if you actually want to trade like me and chart like this, the link in the description below, the affiliate link for the TradingView software, is down below. Please use that. It actually helps me in the future of trading, or my future of trading, to be perfectly clear. Okay, so let's go ahead and go over the criteria of this backtest, as it does present a downside continuation. But first, let's explain this to the new viewers and new listeners. So yes, this is volatility you're looking at, represented by BBWP. It is direction neutral. In order for us to gain a bias for direction, we actually pair this with a momentum-based indicator like this one, stochastic momentum. It's very similar to an RSI or a MACD, since they are momentum-based. Okay, so in the backtest, particularly to a momentum versus volatility profile, I have measured the iterations downside pressure, the iterations duration to get to that downside level, any time that volatility has expanded into or beyond the 90 percentile, which I consider to be anything beyond this red line that my cursor is over. Okay, so in this case, this was an iteration, and it started a contraction phase, and we faced a minus 23.01% to the downside. Okay, so now all throughout the trading history of RMED, I also measured, I also took iteration from the instances to where the momentum versus volatility has gotten the downside correct versus incorrect. Okay, now another thing is that you should know that stochastic momentum, I've tested this in several tickers. I back tested this indicator several tickers, and it has given me an average of about 75 to 90% or 91% at the highest in guessing the asset's direction. So it's not perfect, but it's pretty consistent, and it's good to factor into our odds. So now let's go ahead and look at the statistical results that we did get from this back test. Okay, so you're looking at the 12-hour BBWP. Total iterations, we have 16. Now, out of those 16 iterations, The momentum versus volatility profile has guessed the direction to the downside correct 14 out of those 16 times, giving us an average downside accuracy of 87.50% with an average downside pressure of 28.82% over the span of just over 21 days. This is proof of work. Okay, so the reason why I'm saying that this is potentially facing some downside in the immediate short term is because the volatility versus momentum profile has already met the criteria for a downside move. As you can see, momentum is now starting to pivot towards the downside alongside the volatility component, which is this spectrum line, crossing below the moving average. So this usually signals a downside incoming. So now let's go ahead and just measure what that downside can be based on our current position. So we're going to take a measuring tool from our current price action to, let's see, 28.28%, I think it was, right? So let's go ahead and measure it like this. It's not going to be perfect, but it should be close. So that was 28.82. Sorry, let's go ahead and just make that a little more accurate. 28.82. Let's see. All right, probably not going to get any better than 85. Okay, trackpad on the laptop. This is very difficult. My apologies, you guys. Bear with me. Here we go. Okay. All right. So now it is suggesting a continuation to $3.33. Okay. So in this case, $3.33 would be actually just below the 1.618, just above the 1.272. I'm sorry, just below below the 1.272. So 333 would be right over here, which is very much in confluence with our 50-day simple moving average here. So there is the potential to where we can actually wick down to form something that Wyckoff theory calls as a terminal shakeout or a spring. And we could then face an upside move upon the completion of this statistical move. Please know that the statistical metrics are statistics and not certainties. Okay, so we definitely need to know the difference between those. And also bear in mind that it is upon the firing of the signal, which is pretty much now, 21 days, just over 21 days to fulfill that downside move. But in fulfilling that downside move, if you're long RMED, that would still present a series of higher highs. It would just be another higher high, a lower high in the grand scheme of things. So before a continuation up, as you can see here, we go up, we come down, we're going to go probably up, and then we're going to come down all the way down to this area. So now let's move on to the last part of the chart, which is the RSI. So we're going to be looking at the 12-hour in particular, and why I have all these lines drawn here is because of this. Divergence. So divergence usually signifies the opposition of price action versus momentum. In this case, RSI, the relative strength index. So anytime where price action is making a structure of higher lows, lower highs at this case, and the RSI or momentum is making a series of higher highs, we can consider that a drive of hidden bullish divergence. Now, the white drives right here are colored in white because we have to go through price action to get from point A to point B. That is usually named phantom. Okay, so these are drives of phantom hidden bullish divergence. So in this case, we have many drives of bullish divergence. Of bearish divergence. Why did I say bullish? This is bearish divergence. Okay, which is another thing that it is currently in play. And it is another reason to back the statistical move to the downside. Okay, so if you are in a short position, then there is the potential to where you can actually make a full-on downside thrust to the 50-day moving average, which could be at about $3.33 over the span of the next 20 days. Okay, definitely set your stops. Definitely set your, worry about your risk. Make sure to take profits on the way down, and then make that move to the way up. Okay, so yes, and now the last thing within this is just going to be the RSI in multiple time frames so that we can see just what may happen in the next trading session, meaning tomorrow. Okay, so please guys, while I do this here, know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as a form of entertainment only. Okay, I need you to do your own DD, and we will be okay, because I can't actually suggest for you to buy or sell any assets. All right, you guys just do your own DD and we'll be fine. So yes, we're going to start off with the immediate short-term time frame, which is the 30-minute located right here. Okay, so for the new viewers and new listeners, this is, I'll be right there, buddy, just a sec. For the new viewers, new listeners, this is the bullish control zone upper half. This is the bearish control zone lower half, okay? The inner workings is the bear weakness percentile, and the outer workings are the weakness percentile, and then the outer workings is the strength percentile. Okay, immediate short term is suggesting a continuation onto the downside pretty aggressively, which backs our thesis, so we can actually see immediate short term downside. Okay, bi-hourly failing the bull strength percentile, but we are still within the deep areas of bull weakness here, so we are likely to maybe find some sideways trading here within the bi-hourly. Now the 6 hours suggesting downside as well, and now it is very much in the shallow areas of the bull strength percentile, which is likely for us to find some downside. Okay, I'll be right there, buddy. Just a sec. And this is the daily, still suggesting downside. There is potential sideways trading here since we're at the junction of this. But yeah, statistics are showing some downside still, you guys. Please just watch your positions, use risk management, and everything will be okay. But I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me within Discord or Twitter. The links will be in the description below. But with that said, I wish you well, a very good night, and Daddy has to go and tend to his baby boy. Okay? And I'll catch you at the bell tomorrow. Adios.